Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined today by Richard Perry, who is a market analyst at Hantec Markets. Good morning, Richard.
Good morning. How are you, Matt?
Very well, thank you. Nice. Happy Thursday to you.
Quite right.
With no further ado, let's crack on. We're going to talk about the dollar today.
Yeah.
Now, the dollar's been out of favour this year, but showing a little bit of strength of late. We had some strong ISM manufacturing data yesterday. But let's have a look, starting off with the dollar versus the euro.
Yeah, I mean, just general theme really. There is, I think, a bit of a dollar comeback at the moment. Last few weeks, certainly, we've seen a lot of factors pulling in the dollar's favour. We've seen a more hawkish Fed coming out. We've seen the data turning around. I mean, specifically this week, we've seen the ISM manufacturing and non-manufacturing yesterday have been very strong. And I think it sort of suggests it's setting up reasonably well, I think, for payrolls tomorrow. I think payrolls tomorrow is going to be an odd one because we've got also the impact of the hurricanes that are going to sort of play out through the jobs numbers there. And I think that is going to be a factor that sort of pulls the jobs numbers lower, but I think the market will be looking out for the average earnings growth, really. That will be the key factor. Can we start to see not only the unemployment rate bottoming, which it seems to be around about that sort of 4.5%. U6 is another thing that we should be looking out for that, but also the average hourly earnings starting to sort of pick up again. So that will be something that the markets will certainly be looking out for tomorrow in the payrolls data. But in front of that, we've seen a lot of factors that are, as I said, playing in this dollar strength favour. A little bit of volatility this week around the chatter around the Fed chair position, but I think ultimately this euro-dollar chart continues to show that there's a corrective move on euro-dollar with a top out below 1820. That sort of completed a little head and shoulders pattern that gives you around about 270 pips of downside, 1550, which certainly means this $1.1660 level that we saw from the August low, which is interestingly enough around about that 23.6% fib level, is a key level. And if that breaks to the downside, I think we could see a corrective move continuing and certainly towards that 1550 target. So that is my key level for the near term, $1.1660. That's the level I'm looking out for tomorrow. Say, for example, if we saw a strong payrolls report, that would be pulling euro-dollar low. That's the level that if it breaks to the downside, we could see further selling pressure. Interestingly enough, the RSI continues to sort of bottom around about the 40 level. So this is, again, coming back towards a key level. That sort of, again, sort of marries up with that 1660 level. So this is a key crossroads, I think, near to medium term for the dollar on euro-dollar. So if it pulls below that, you could see further downside, certainly.
And from a fundamental point of view as well, with the euro at the moment, with the German elections a few weeks ago, that's still playing out, and certainly Spain and the Catalonia issue.
We've got political risk from the Catalonia situation. Also, the fact that ECB members have tended to be a little bit sort of pulling back from the sort of reduction in asset purchases, and the possibility that the market could have sort of gone a little bit too far on that one for the near term anyway. So that is an interesting factor as well. So added in with the sort of increasingly hawkish positioning on the Fed, it certainly looks as though that the dollar is in favour at the moment. There is further moves to play on that one.
And we'll look out for the ECB policy meeting minutes that from the last meeting in September, just see if they're on track or what they say about reducing QE and QE tapering. So that's out today.
Quite right.
So, but key level there, as you say, 116.60. We'll look out for that. Moving on, we're looking at the dollar versus the yen. Interesting. I mean, again, we said on the show quite a few times, it feels like it's anchored around this 110 level with the ranges between 108 and one. We're now up to kind of 112.58. Where do we go from here, though?
Yeah, again, I mean, you've basically called it. It is a range play, and it's pulled back from that 108 level, rallied higher fairly strongly. Actually, it's consolidating at the moment. It's in sort of a 100 tick range actually for the past week or so, between 1220, 1325. So I think that the payrolls report again will be the driver of the near-term move on that. It's consolidating at the moment, a little bit lower today, but I think generally it will be the payrolls report that drives that break either way. So it will be 100 pips either way of upside target above 1325 or downside target back towards sort of 11.20 area. But 11 big figure is a key sort of medium-term pivot. And as you say, that's not a million miles off the sort of middle of that range that we've been seeing dollar yen playing in. So I still remain positive above 11 big figure, even if we were to see a little bit of a near-term breakdown below 12.20. But I think ultimately I'm still sort of pulling for a move back towards the highs, really. I still think we've got just a consolidation within some strong momentum indicators. And I think that a breakout above 13.25 would drive that move towards 14.50 again.
Very good. And finally, looking at gold, a little bit out of favour. You talked about the head and shoulders on the euro. Just talk us through gold and potentially where it can go from here.
I've sort of been looking at gold increasingly as a corrective play, and it is still in that downtrend. And as you can see, the gold price goes through these phases of uptrends and downtrends, and has done throughout this year. It just again reflects the fact that gold is, I think, a choppy range play throughout this year. I've been saying that for months now, and you can see this on the MACD lines, where they give their crossover buy signals at the beginning of those uptrends, and then the crossover sell signals to end those uptrends. You haven't had a crossover signal yet, but you are beginning to see the RSI ticking a little bit higher, which has in the past tended to be a bit of a sort of a trigger to a possible rally. But without that crossover buy signal on the MACD lines, I wouldn't be getting too far ahead of myself on that one quite yet. And I still think that there is further downside in this gold price, probably towards 12.51 at the moment. I think this little rally that we've seen in the last few days is going to get sold into, as I said, it sort of plays into the whole dollar strength argument. Dollar strength would be pulling gold lower, and I think that is likely to be the continued theme in the next sort of week or so.
Fantastic. Well, 3 things to look out for there on the dollar plays, but very insightful. Richard Perry, market analyst at Hantec Markets, thank you so much for joining us here today.
Thank you for having me.